Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. The Federal Reserve is taking center stage today, and crypto markets are holding their breath. At 2 p.m. Eastern Time, the central bank is expected to announce a 25 basis point interest rate cut, bringing the target range down to 3.5 to 3.75%. Markets are pricing this move in with 90% probability. What traders really care about is Fed Chair Jerome Powell's tone during his 2:30 press conference. Recent inflation data shows core PCE running at 2.8% year-over-year, above the Fed's 2% target, which could limit how dovish Powell sounds. UBS strategist Jonathan Pink expects broad support for this cut, but warns not to expect major policy revisions. The real question is whether Powell hints at more easing ahead or pumps the brakes on expectations. Bitcoin is trading around $92,118, holding steady in its recent range. Ethereum is showing impressive strength at $3,317, up about 6% in the past 24 hours. XRP sits near $2.07. The crypto market has been consolidating ahead of this decision. Several crypto analysts warn that rate cuts alone won't reverse bearish trends if technical structure doesn't improve. If Powell hints at liquidity support measures like Treasury bill purchases, that could provide the fuel crypto bulls are hoping for. Speaking of institutional adoption, PNC Bank just made a major move. The 8th largest US commercial bank by assets launched Bitcoin trading for its private bank customers yesterday. PNC serves 15 million customers and is using Coinbase's infrastructure to enable the offering. This follows similar moves by SoFi and Bank of America, signaling that traditional banking is increasingly embracing digital assets. On the regulatory front, the SEC approved the Bitwise 10 Crypto Index Fund, ticker BITW, to trade as an exchange-traded product on NYSE Arca. This is the second multi-asset crypto index fund to get full ETP approval in the US. The fund tracks the 10 largest cryptocurrencies including Bitcoin, Ethereum, Solana, and XRP, with monthly rebalancing. The Commodity Futures Trading Commission launched a pilot program allowing Bitcoin, Ethereum, and USDC to be used as eligible margin collateral in derivatives markets. Acting CFTC Chair Caroline Pham said the goal is to ensure crypto-linked leverage operates within US bankruptcy protections. Notably absent from the pilot are Solana, XRP, and Ripple's RLUSD stablecoin. Ethereum is stealing the spotlight today, climbing above $3,300. BlackRock filed to launch the iShares Ethereum Staking Trust, which would provide staking yield to investors. Major institutions including JP Morgan, Deutsche Bank, and Standard Chartered are building tokenization infrastructure on Ethereum. Spot Ethereum ETFs recorded $177.7 million in inflows on Monday, outpacing Bitcoin's $151.5 million. Standard Chartered has slashed its Bitcoin price forecast significantly. The bank cut its 2025 target from $200,000 to $100,000 and pushed back its $500,000 target from 2028 to 2030. Analyst Jeffrey Kendrick cited slowing ETF inflows and the end of aggressive corporate buying by firms like MicroStrategy as key reasons. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.